Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is Tuesday, October 8th. We're going to take a look at one out of the consumer discretionary sector. This is Alibaba Group. This is actually a Chinese company. It's a lot of people call it the Chinese Amazon. Now, before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever we put out any new content. I do the Stock Pick of the Day video series Monday through Thursday whenever the market's open. I also do suggestions from subscribers and viewers. So if you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below in the comment section. I'll work it into the rotation. Special thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. And watch time. Watch time is one of the metrics that YouTube uses for their algorithm to help spread the video. So if you could watch the videos to the end, I really would appreciate it. Again, thank you for everyone out there who's taking the time to do that. And let's get back to the video. Now, this is the Vested Interest Stock Screener. This is how we'll be going through the video. We'll look at this criteria. We'll see how it stacks up at the end. It is not a financial company, so we won't be looking at price to book. I throw that in for banks, financial companies like insurance companies. You can use price to book for any company. Just make sure if you are using it for companies outside the financial sector, you are comparing the company that you're looking at's price to book to other companies in the same sector producing similar products, right? You can also use price to book as a comparable to the company you're looking at by looking at historic price to books and seeing, is it expensive based on price to book currently, or is it cheap based on price to book currently, if you're just looking at price to book for the same company. So it must meet 5 of 8 at the end of this to make it onto my watch list. Now remember, if you've been watching for a while, this does not mean I am investing in the company just because it meets 5 of 8. It means it makes it onto my watch list where I do more of a deep dive into the company's financials, look at their balance sheet, their income statement, debt to equity ratios. Is their revenue growing over time? I'm going to look at stuff like their margins. Do they have more assets over liabilities? Are they paying down debt? Is their revenue growing? I also look at PEG ratios. A lot of other criteria in their financial statements you should be looking at outside of just an initial screener, which is all this is. This just gives me a high-level review. There are thousands of companies in the stock market, so I can go through those companies or some of the companies I'm interested in on a high level with this screener to see if I want to do more of a deep dive into the companies. And then if it does make it onto my watch list, 5 of 8 or 6 of 9, then and only then do I do more of a deep dive, do a discounted cash flow analysis on the company, figure out a price I'm willing to pay, and then wait for the company to fall into that price range I want to pick it up at. Now, check this company out at www.alibaba.com. That's www.alibaba.com. That is their homepage where I pull this information from. And as I mentioned earlier, they are considered the Amazon for China. They produce products or provide products all around the world, but primarily in China and Asian countries, Europe, around the world as well. Launched in 1999, so I was actually surprised they've been around that long. Alibaba.com is the leading platform for global wholesale trade. We serve millions of buyers and suppliers around the world. Again, very similar to Amazon. 40 different categories they provide products in, 190 countries, right, all around the world, including the United States. If you want to go to Alibaba.com, you can do that. 100K messages per day. Alibaba.com brings you hundreds of millions of products in over 40 different major categories, including consumer electronics, machinery, and apparel. Again, check them out at their homepage if you want to know more about the products that they offer. Now, the reason we are taking a look at them today, down 6.67% on the day. They have been running up recently, but a big drop today. Closed out the day at $109.68. We are talking about Alibaba Group Holding Limited, ticker BABA. Again, this is a Chinese company, so I completely understand if some of you out there are against investing in China. My money's green, doesn't care where it's made. So I'm looking for the best deals out there, regardless of where the company is located. 52-week range as low as $66.63, as high as $117.82. They were recently, before this drop, right up against their 52-week high. They're still pretty close to that, not within 15% of a 52-week low, that's for sure. I was picking this one up in the high 60s, low to mid 70s. I think my cost basis is around 78. I think I picked up some in the 80s as well, 82, 84, somewhere in there. You'll see my position here. I am long Baba. I do have a position in this company. if I didn't mention that earlier. Market cap of $262.681 billion. So they are a large cap company, a beta of 0.34. So typically less volatile than the overall market, significantly less volatile, even though there was a big drop today. PE ratio 27.63, $27.63 per share. That seems a little elevated though with tech companies like this. I know it's in the consumer staples or consumer discretionary sector, but it really is a tech company that sells goods, which makes it in the consumer discretionary sector. But a lot of their money and growth is around the tech side. At EPS, $3.97 per share. Earnings date, November 14th through November 18th, sometime in that little window there. Forward dividend is $2 paid out on the year. Now, they say that they are an annual payer. They just recently started dividends. We'll see that here in a little bit. They've only made 2 payments, and one was their, I'm assuming, annual payout, and then they had another one that I believe they considered a special payout. So I'm going to go with what they're saying. They only are going to be paying annually, but so far they have paid out twice this year. So we'll see. They just don't have a lot of history. We'll see that here in a little bit as well. Ex-dividend date, June 13th. We're well past that. They've already paid out that dividend long ago here. 1-year target, $113.07. So they do see some, at least according to Yahoo Finance, some upside as far as price appreciation on this one from where it currently sits. Jumping over to dividend yield theory, we usually take a look at this to see if the company is potentially undervalued. We look at their 5-year dividend yield average, which they don't have, and we typically compare it to their current 1.7%. We can't do that, so unfortunately, I cannot use this one here. Payout ratio is low. I like under 75%, 51.42%, so the dividend does appear safe, which leaves them some room to grow that dividend as well. They are doing a big repurchase, a share repurchase program right now as well, so that's worth mentioning. Now, dropping down below, we're going to take a look at free cash flow. You can see $188 billion in free cash flow back in 2021. 2022 looks like a drop down to $89 billion. 2023 up to $165 billion. 2024, at least so far, their numbers, right? We're well past the March report out here, so we've got other numbers to look at the end of the year. We'll have to wait to see how this one shakes out. But $149 million so far. Now, repurchase of capital shares, I mentioned they are repurchasing shares aggressively, and part of this drop from 2021 can definitely be accounted for in 2022 with an increase in the repurchase of shares, right? They went from 773 million repurchase shares in 2021 to 61 billion in 2022. 2023 up again 74 billion, and 2024 so far 88 billion. So they are aggressively repurchasing their shares, and I'm going to say growing free cash flow because, like I said, the decreases appear to be more than covered with their increase in repurchase of shares. Now, jumping over to stockanalysis.com, this is one source of information that I like to go look at. You can pick any sources that you want. Yahoo Finance was the other one that you saw on the previous page. Just make sure you're not blindly following just one source. Look for 2-3 different sources so you can make sure the information you're getting is accurate and up to date. Now, they do have 15 analysts that have taken a look at this. They call it a strong buy. They have a low estimate of $85. That would be a 22.5% decrease from where it currently sits. Average estimate of $107.27, pretty close to where it currently sits. That would be a 2.2% decrease. And if it happened to hit their high of $130, that would be an 18.53% increase, and you could collect that, dividend. Well, if you held them whenever they did pay a dividend along the way. Now, jumping in statistics, I like to look at return on equity and return on invested capital to see how well the company is reinvesting back into itself. And I like 10% or better for these metrics. Now, return on equity for this one, only 5.67%, lower than I like. And I was actually surprised by that. Return on invested capital, same thing, 6.32%, pretty low. I would like these to increase and be at least above 10%. So neither one of these meets the metric that I'm looking for there. EPS growth forecasted is at 16.1%. I like 5% or better forecasted over the next 5 years. So this definitely meets what I'm looking for there. And revenue growth is not one of the metrics on my initial screener. It is one whenever I do more of a deep dive, but I'd like to include it here because it's right by the EPS growth. They do have 7.06% forecasted over the next 5 years as well. So good numbers overall, except for the ROE and ROIC and the current price per share. Now, as I mentioned, I am long BABA. You can see here I hold 109.68 shares, so I did get their last dividend payout. I am up significantly on this position, 46.95%. Again, I don't know why it didn't list my cost basis today, but it didn't. But I am up significantly on this position. Here, again, I think my cost basis is right around $78, $79 per share, right in there. I do have $12,744 currently into the position. I believe that includes the $4,071.51 in gains here as well. Now, again, they say annual payout ratio. They're saying 60.55. Either way, under the 75% that I'm looking for. Yahoo Finance had them in the 50 range, so take that with a grain of salt. Maybe add them together and divide by 2, split the difference. No dividend growth listed because they just started paying out dividends. Well, I guess they paid out in 2023 was their first one, and then in June. But I believe this was their regular, well, January 18th. I'm sorry. Their payout was January 18th, and then again in July. So it was this year. I thought it was this year. I received the July one. I did not get this January 18th. I did not hold them back in December. I did not purchase them back in December. I purchased them earlier this year. They were still relatively cheap. But they had not paid, or they had just paid out a dividend, I think a couple months before I bought them. So as you can see here, going back in time, well, growth 1 year, which I don't agree they're growing the dividend because I believe this was their first payout and this was a special payout, unless they're saying that's dividend growth, but then they have no growth listed. So I'm going with no dividend growth, and this was a special payout. That's how I'm reading this. Buyback yield was positive 3.89%. Shareholder yield positive 4.81%. You want to see both these numbers positive. You know, when they're doing buybacks, you want them to be doing them in an efficient manner, buying back whenever shares are cheap, not whenever they're expensive. And you want to see positive shareholder yield as a shareholder. So again, paid out in January 18th, 98 cents. And then again, this special dividend, July 12th, $1.64. I'm assuming this January, we'll find out here in a few months, I'm assuming this January payout is going to be their regular payout. So I'm expecting 98 cents or more. I'm hopeful that they raise the dividend for their next payout, but we'll see. Now, getting back to the screener, let's see how this one stacks up. Understand the business. That's where we started, right? Again, they are pretty close to the Amazon of China there. Growing free cash flow, I'm going to say yes. Growing dividend, we just don't know yet. I don't know. I can't say yes or no, but I'm not going to give them a check for it. Dividend payout ratio is under 75%. I can't use dividend yield theory because they don't have 5 years of dividend payouts. It is not within 50% of a 52-week low, so no check there. Return on invested capital and return on equity are too low for what I like, not above 10%, so no check there. Earnings per share growth is over the 5% plus that I like, so check there. And we did not look at price to book because this is not a financial company. So 1, 2, 3, 4 currently. This one would not make it onto my watch list. That is really why valuations are so important. Whenever I was looking at this earlier in the year, it still had 15% of a 52-week low, at least there. So that would have put it on my, I think that's what really did put it on my watch list. And then I did more of a deep dive into the financials and ended up buying the company because I thought it was pretty cheap. So this one right now, unless it pulls back, it would not make it onto my watch list. That's just the reality. I'm not concerned with the company because I know enough about it, but it is not one I would be looking at right now if I was to run it through the screener today. Let me know what you think of BABA. Is it one that you're investing? Well, let me know what you think of Chinese companies. Maybe, like I said, maybe you don't invest in them. That's fine. I'd love to hear from you in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community and drop a comment down below. Let me know what you think of BABA. Let me know what you think of the videos. If you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop that down there as well. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selection criteria, or seek the advice and counsel of a certified financial advisor.